The sensex is down about 400 points, so not a great start for the market.
In the red, but I think there is some attempt to try and recover from the low.
The mid-cap index has come in for a big profit taking. It's down 800 points.
A big down day for our markets. So global markets around the world have been hit, close in the red, but significantly off from the session lows.
Hello and welcome to Markets Today. I'm Sonal Bhutra and here are the top market headlines for the day. Sensex and Nifty declined to end at their lowest level in a month. A sell-off in global bond markets worldwide rattled stocks. Borrowing costs in US and Europe rise to the highest level in over a decade. HDFC Bank shuffles portfolios of its top team across key segments like mortgages, retail assets, branch banking and digital as it looks at life post-merger with HDFC. This even as it posts strong growth in the second quarter. Bajaj Finance turns in a mostly healthy Q2 show. Avenue Supermarts delivers inline sales and stores growth. Vedanta is in an uninspiring performance, but some smaller lenders do well. IDFC First Bank launches a QIP to raise 3,000 crore rupees. However, stock ends with cuts. Updata Services makes a lackluster debut, lists at a 5% discount to its issue price. Soba shares stand nearly 5% after report says Bengaluru court initiates criminal proceedings in a forgery case. SEBI chief Madhabi Puri Booch urges the good guys in the investment advisory industry to come forward and report malpractices. Says 35% of the advisors are still not registered and SEBI wants the industry to grow and hit 1 million investment advisors. Let's start with the sell-off across stock markets worldwide. Bond markets in US and Europe saw a sharp fall and this rattled equities globally. Sensex lost nearly 300 points and the Nifty was down 80 points. Midcaps got battered with the index losing over 500 points. Prashant Nair is here with more updates and the market wrap. Prashant.
Well, it was supposed to be a poor session because it was ugly overnight when we came in the morning and it was ugly for a while. For the bulk of the session, actually, there was some recovery towards close. The Nifty, as you can see, recovered 100 plus points from the day's low, ending just under 0.5% lower. For the banks, the recovery was not as sharp, ending almost 1% down. For the broader market, mid and small cap, between 1.25% and 1.5% in terms of cuts. Financials were under pressure, as I said, on the bank Nifty. So Axis Bank, SBI, IndusInd in large caps, which sold off. There was NTPC, which was down. Ultratech and Maruti were the other large cap losers, up to 2%. Now, some gainers from the FMCG space, there was Nestle and Lever. HDFC Bank was the other one, which ended 1% higher. People have been waiting for this one to turn, and today there were first signs in a down session. Broader markets, again, lots of financials which sold off. PNB, Indiabulls Housing, M&M Finance, L&T Finance. Other than that, there were real estate developers like Sobha, Loda, which was lower. Zomato was down. JSW Energy. Metro Brands, which has done well over the last couple of days, sold off. There was BDL and EMS, a recent listing, which gave back some of the recent gains. Some gains coming through. Advanced decline, of course, was skewed in favor of decline, but Suzlon was up. JSW Infra, there's a rating upgrade as well. Stocks done very well, 40% since IPO listing. DMart, MapMy India, and Ramco were some of the other names which stood out. It was a broadly down day, although there was recovery which came through. We need stability. US yields need to stop rising and the US dollar also needs to go down. I think those are the two things which markets will be very keenly watching over the next couple of days and also as we come back tomorrow morning. Back to you.
Oh, yes. So it has been a down day. Thank you so much, Prashant, for joining us with all those details. Let's get you some market opinion now. Anand Shah, head PMS and AIF investments at ICICI Pru AMC, said that he sees a lot of value in the large cap space, also prefers banks over NBFCs. Listen in.
Obviously, a lot of things going for India, and to that extent, this year belongs to bottom up. And when you sort of scan the market, obviously we find a lot of value in large caps relative to the mid and small caps. So that's true. You have to also appreciate that banks actually had a very tough time between 2015 and almost all the way up to 2020, 2021. And in that period, obviously, there was a significant derating in banks and re-rating in NBFCs. I think going forward, while there would be winners within NBFCs also, but our take is that the bank is better placed, both in terms of growth, in terms of competitiveness, as well as in terms of relative valuations. I think we would at least we prefer banks over the NBFC. That is.
Okay, all right. That is some market opinion coming in. With that, we'll move on to the second headline for the day. HDFC Bank rallied over % on the back of a strong second quarter business update. Deposits of the merged entity grew over 18% as compared to the same quarter last year. Abhishek Kothari joins in with more. Abhishek, a strong quarterly update from HDFC Bank.
Well, HDFC Bank gave its pro forma Q2 FY24 business update. If you take a look at these numbers versus the FY23 merged numbers and previous quarter's numbers, deposits are down 2.6% when compared to FY23 numbers, and they are up about 5.3% on a sequential basis. Advances growth is about 11.6% in the first half when compared to about 5% on a sequential basis. So CD ratio, that is credit to deposit ratio, that's remained healthy at about 108.4% when compared to 94.6% in FY23 and about 108.8% in the previous quarter. Now the merged number as per release, when you compare YOY and quarter on quarter, deposits are up 18.2% YOY and about 5.3% quarter on quarter. Advances X of HDFC non-individual loans is up 17.6% YOY and about 5.5% quarter on quarter. In terms of the non-individual loans of HDFC Limited, they are down about 20.4% YOY and about 6.2% quarter on quarter. So taking this into calculation, the loan growth is about 15.3% YOY and about close to 5% sequentially. The credit deposit ratio, if you take the merged numbers, is at 112.1% when compared to 114.9% on a YOY basis and about 112.4% on a sequential number. So in terms of business momentum, it's been pretty healthy quarter on quarter with 5% business momentum that you are seeing for HDFC Bank. Back to you.
All right, thank you so much for that. Well, HDFC Bank also announced a major top management rejig. The bank has appointed new heads to retail and mortgage businesses. Also appointed a new CEO for digital functions. Sashidhar Jagdishan, the MD and CEO of the bank, said, and I quote, "This change is being done to bring in a very sharp focus on leveraging what we have built and for enhanced execution." End of quote. Separately, Abu Dhabi-based international holding company has increased its stake in Adani Enterprises to over 5% as well. Okay, all right. Moving on to the third headline now. AU Small Finance Bank, Bank of Maharashtra and Bajaj Finance are under pressure, and they reported their business updates for the second quarter. Deposits have increased on a yearly basis for all three stocks. Abhishek Kothari gets us a quick roundup. Abhishek.
AU Small Finance Bank, the loan growth has weakened over there when you compare to historical averages. So if you take a look, deposits are up nearly 30% YOY and about 9.3% quarter on quarter. The advances growth is of 24% YOY and about 2.2% sequentially. Q1, the loan growth was about 29.2% YOY and 7.5% quarter on quarter. The CASA ratio has declined and is at multi-quarter low, 33.9% when compared to 42.3% YOY and about 35% quarter on quarter. The cost of funds continued to rise for them, now at 6.7% when compared to 6.58% in the previous quarter. Bank of Maharashtra, absolutely brilliant numbers coming in over there in current scenario. Deposits are up 22.2% YOY and a decline of 2% quarter on quarter. CASA has inched up by 10% on a YOY basis in absolute value and is down about 2.6% quarter on quarter. CASA ratio, however, remains one of the best in the industry at 50.7%. The loan growth is pretty strong over there at 23.5% YOY and about 4.2% quarter on quarter. Sharp jump in CD ratio or credit deposit ratio. On a sequential basis, it's up now 76.5% when compared to 71.9%, suggesting that the net interest margin could remain healthy or improve on a sequential basis. Bajaj Finance, they have given a mixed bag. The good part about their business update is that the AUM growth of 32.9% YOY and about 7.5% quarter on quarter. So YOY, it's the best growth that they are seeing in last 15 quarters. Deposit momentum remains strong at 39% YOY and about 10% quarter on quarter. Customer base has also grown nicely at about 21.7% YOY and close to 5% sequentially. What is not so good in Bajaj Finance update is that the new loan disbursed, that's declined by 14.2% quarter on quarter. So if you take a look at the historical trend in Q2 versus Q1 over the last 6 years, this is perhaps the highest decline that you are seeing. Also the fact that liquidity in the balance sheet is down by 10.2% quarter on quarter, and cross-sell rate to the same customer is at 9-quarter low of just 6.5%. Back to you.
Okay, all right. Thank you for that. Let's talk about more second quarter updates. Avenue Supermarts gained nearly 4% after reporting a yearly increase of 18.5% in revenue for the second quarter. The company has also added 9 more stores. Manglam joins us with all those details. Manglam.
There's a good second quarter update coming in from DMart, where the revenues of the company grew by almost 18.5% on a standalone basis, a little over 12,700 odd crores. This is important because remember, overall year on year, the store addition of the company has been just at around that 11.5%. So this implies that there has been positive same store sales growth and higher than what it was quarter on quarter. In fact, quarter on quarter as well, the company's revenues grew by about 6 odd percent. The stock has been a bit of an underperformer, so maybe, it saw some more gains on account of that too. Though valuation wise, it is not particularly the cheapest stock, but the fact that it's showing some growth is something that the street likes. Important to watch out for in the final numbers, however, will be the contribution of non-FMCG verticals, namely the apparel vertical, which is high gross margin, and as a result of which the gross margins and the EBITDA margins of the company as well. Brokerages like Macquarie were happy with these numbers, and as a result of which they have a positive stance on the stock.
Okay, Manglam, thank you so much for joining us with those details. Vedanta slipped 3% as the company released its quarter 2 business update, saw a 2% jump in its aluminium production on a yearly basis. However, mined metal output saw a dip. Nigel joins in with all the details. Nigel.
Well, that's right. Vedanta came out with its operational performance, and on most segments, well, it looked a little bit tepid. Starting off with the total aluminium production, well, that was up only marginally. It was up close to around 2% approximately. On the zinc India business, the integrated saleable metal, which basically includes your zinc as well as your lead volumes, both of them put it together was down close to around 2%. But the bigger hit came on the silver integrated volumes, because that was down close to around 7% or thereabouts. Remember, that's supposed to be the driver going ahead as well. The zinc international business as well, the total mined metal was down by 10%. The oil and gas volumes, well, they dipped by close to around 5% on a year-on-year basis. Even on a sequential basis, they were a little lower. The lone segment that looked quite good was the power sales, and that was up in double digits. But that looked quite good. But otherwise, the quarterly, update that they came out with was a little bit tepid.
Okay, all right. Thank you, Nigel, for joining us with all those details. Moving on, Insurance Regulatory and Development Authority is set to come out with Insurance Reforms 2.0. Yash is here to tell us what these reforms are and how they impact Indian businesses. Yash, over to you.
Right after Debashish Panda, the then new IRDAI chairperson took over, he unleashed a series of insurance reforms. This came in the form of expenses of management, use and file regime, Bima Sugam, and many more. Well, a sequel to that seems to be in the works. IRDAI is gearing up to unveil Insurance Reforms 2.0. Insurance Reforms 2.0 would largely be in areas of accounting, risk capital, as well as capital supervision. Now, what are these reforms? The first one here would be IFRS 17, or the equivalent of that in India would be Ind AS 117. The second one is risk-based capital or risk-based solvency. And finally, the third one would be risk-based supervision. Let's start with the most important of the three, IFRS 17 or Ind AS 117. What is IFRS 17? It's an accounting method new to India, but adopted in places like the US, Europe and China. The new accounting method, nothing like the one which currently exists, makes insurance accounting more transparent, relevant and accurate. It ensures reflection of long-term insurance business on an annual basis. As I said, life insurance is a long-term business, policy duration of about 10 to 15 years. IFRS 17 will spread out the recognition of premiums over the life of policy. Let's come down to the financial specifics. Under IFRS 17, top line for life insurance companies is expected to come down as the single premium element, of which currently only 10% gets accounted for in a year, will now have to be accounted equally for the number of years for which any particular policy lasts. Then the annualized premium equivalent or APE will also come down for the same reason of single premiums coming down. Value of new business won't be impacted, but value of new business margin is expected to increase, since the denominator in the calculation of margin, which is APE, is expected to come down. Another important change under IFRS 17 would be that the acquisition cost on a long-term policy will have to be accounted equally basis the life of policy and not all of it in the same financial year. This is expected to bump up profitability for life insurance companies. Now coming to general insurance companies, premiums from long-term business like motor, third party or health will have to be accounted for the term of the policy and not all of it in the same year. acquisition cost of a customer will also be spread across the policy term. Here, analysts suggest that the new method could increase combined ratio levels for the general insurance industry. Now, IRDA wants to implement Ind AS 117 by April 1, 2024. It is likely to be applicable for listed insurance companies first, followed by top 15, and then for everyone. Let's now come to risk-based solvency. Under this, insurers will only have to hold capital in proportion to the business which they write and the risk which they take. Riskier the business, higher the capital. This versus the current regime where insurance companies have to have assets which are 150% of the liability. Now, finally, we come to risk-based supervision. Each insurer will be assessed based on the risk profile and the overall risk which it carries. Certain parameters will be specified for risk assessment. These would include finding contraventions of the law, data reconciliation, business strategy, financial analysis, on-site inspection, as well as the management style as far as the business is concerned.
Okay, Yash, thank you so much for joining us for those details. Time for a short break. We will be back with the other headlines in just a bit. Stay tuned. Welcome back. You're still tuned into Markets Today on CNBC-TV18. The fourth headline that we are tracking for you, a CNBC-TV18 news break is confirmed. IDFC First Bank has launched a qualified institutional placement to raise up to 3,000 crore rupees. IDFC First Bank tumbled over 2% in trade today. Sudarshan joins it with more details. Sudarshan, tell us more. You broke this story first up.
IDFC First Bank was under pressure today and saw a fall in line with other banking names. As per the term sheet CNBC-TV18 has gotten access to, IDFC First Bank has launched QIP to raise up to rupees 3,000 crore, for which indicative price was rupees 90.25 per share, which was 4% discount to yesterday's closing price. And of this total rupees 3,000 crore, the base size is of rupees 2,000 crore and the green shoe option is of rupees 1,000 crore. If we talk about the equity dilution, there will be an equity dilution of 3.3% on the base size, and if the green shoe option is considered, total equity dilution will be nearly 5%. And if bank manages to raise the entire amount of rupees 3,000 crore, the Tier 1 ratio will increase to 15.3% from 13.7%, and book value see an increase of 6%. Remember, the last time IDFC First Bank had done fundraising was in 2020. They had done QIP of rupees 3,000 crore at a price of rupees 57 per share. After that, in the last 2 to 3 years, both IDFC and IDFC First Bank have had a major run. Just if we talk about 2023, both these stocks are up more than 50% each. Also, recently, Rajiv Jain's GQG made an investment in IDFC First Bank. GQG picked up around 5.1 crore shares at a price of rupees 94.50 per share.
Sudarshan, thank you so much for joining us with those updates. In stock-specific news, Updata Services made a subdued debut on the exchanges, listing with a discount of 5% to its issue price of 300 rupees a share. Reema Tendulkar joins in with details. Reema.
Thanks so much for that. As you rightly pointed out, it's been a muted debut for Updata. A quick word then, before we get to the details about this company, what the company does. About 71% of its revenues comes in from Integrated Facilities Management, IFM. And here the company provides cleaning, housekeeping services, ventilation, air conditioning, production support for manufacturing companies. Everything, all the support that you require to keep a production facility, any premise of a corporate running. And here they boast of clients like Hyundai, Eicher Motors, SBI Life Insurance, IFL Finance, Sony, TTK Healthcare. The second business for the company is called Business Support Services, which as of last year contributed 28.5% to its top line. And here it provides a myriad of services like sales enablement. They provide mailroom management where they manage all the inbound, outbound parcels. They provide employee background check, like police verification before you want to hire someone. They provide audit assurance services for distributors, for retail companies, airport ground handling. Basically, between flights, they will clean the aircraft for you. They'll help with the luggage transfer from the conveyor to the hold. So this is basically what the company does. Now, if you look at the or growth of the company, last year the company grew at a top line of 41%. Its margins are roughly at 7% on a blended basis. 5% is from the facilities management, IFM, while the business support services has higher margins. Now, we chatted with the management where they did talk about a 25% top line growth. They are looking to improve their margins because some of the acquisitions that the company will do, and here the company's earmarked 80 crores from the money that they raised, will be used for acquiring companies in the business support services segment where the margins are higher.
What we had projected in our RHP and what we have done historically is about 25% growth year on year. That's what we've done last 5-year CAGR minus the COVID year. So we'll continue to do that, or we'll continue to, exceed that. So we could look at 20-25% growth year on year the next 5 years. We are last year at about 7% margins. We will hope to improve that at least about 20-30 points every year.
Okay, all right. With that, let's move on to the fifth headline today. SEBI chairperson Madhabi Puri Booch has revealed that 1 in 3 Indian investment advisors are giving guidance to small investors without registering themselves with the market regulator. Speaking at a conference organized by the Association of Registered Investment Advisors, the SEBI chairperson urged the good guys in the industry to come forward and report malpractices. She added that there is a need to distinguish between fact versus fake claims.
We need the good guys to come to talk to us, to tell us what are the malpractices in the market, and to help us to craft solutions so that we address that, so that the good guys win. We want a million investment advisors. Let me tell you, it's as much, I would say not as much. I think it is clearly our failure that we have such a small set of investment advisors. Okay? And every new whole-time member who comes into SEBI, some of my colleagues here will vouch for it, every new member who comes in takes a look at it and says, why is this number so small? Why isn't it larger? And 2 weeks later, after they go through all the details, they're like, we can't have 1 lakh of these kind of guys. Right? So that's the problem. Okay, we can't have 10 lakhs of these kind of guys, but we definitely need 10 lakh of those kind of guys. We need the good guys to win, and for that, the association has to come forward and tell us what's happening, because by the time we otherwise get to know, a couple of people have already committed suicide in Indore. That's the reality.
Okay, all right. That's the word coming in from SEBI Chief. For that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.